Can you? Oh, over here. Okay, perfect.
But this is good luck. There is €1 here, so
Okay.
I shall be fine.
You
Thank
made it.
you.
All right. So what we have for today is a panel in which, we will try to reflect a little bit on our end customers. So first of all, let me introduce myself, Carlos Gutierrez. I work for Santander. I'm currently running cash management sales for Europe. And the idea that we had when we thought about this panel was, this is a bank-to-bank forum. We normally discuss among ourselves about how to basically make money among ourselves as banks. And mainly we discuss about this dual relationship that we all have, which is supplier and client. Within the same relationship, sometimes we act as suppliers, sometimes we act as clients. However, when we try to set up our goals and when we try to maximize the business that we're making, what we normally use behind that are the volumes that our end customers have. So trying to maximize the volumes I receive from other institutions, at the end of the day, what I'm trying to get is as much volumes as possible from the end customers that the other institution has. So the big question is, are we really putting as banks our end customer at the center of our interbank relationships? Whenever we interact among each other, are we really putting our end customer at the center of that? And probably more important nowadays, whether by not putting the end customer at the center, we are fueling somehow the success of all the fintechs that we've seen over the last 5 years. So how is that affecting the fact that fintechs are somehow eating on the bank's pie? So before we launch the questions, we prepare a couple of poll questions. If you can go to Slido and respond to your to the questions that we have set up. If we can put them on Slido. I don't know if I have them here, but the first one was around precisely whether you think that we banks are putting customers at the center. So before we get into the discussion, we would love to have your views around it. Not working? There you are. Okay, seems to be that we are pretty even, but in general, we have the feeling that probably we are putting something else at the center. So the second question is a little bit more into the detail. So same question, but rephrased. Can we see? There you are. So are we prioritizing our interbank P&L rather than our bank end customers' needs? Okay, interesting to see. Seems to be that most of us, we are trying to make as much money as possible, and sometimes we tend to forget a little bit that what we have behind is our own end customers. So with that, let me introduce the panel. Here on my left, Connie Blacklock. She's responsible for real-time payments for Europe, Middle East, and Africa at JP Morgan. On her left, Raquel Galan. She's senior sales manager and relationship manager, for financial institutions within BBVA. And finally, Jenni Hemberg-Wild, if I'm pronouncing it well. She's responsible for financial institutions, fintechs, and broker-dealers within Barclays Europe. And with that, I'm gonna start with the questions. Probably starting with you, Jenni. So you run the fintechs well within your bank, and probably we all seen the success that all these fintechs have had over the last few years. What is, in your view, now that you're clearly an expert on the sector? What is your view on the success factors that have taken the fintechs to the place they are right now?
Thanks, Carlos. And first of all, thank you for welcoming me back to BAFT stage as well. So yes, we all have an angle. My angle is probably quite pro-fintech, if you've ever spoken to me before. So I declare that to start off with. But really, there's a lot of really obvious things that we can say. And we've heard them on a stage in so many panels. Fintechs are agile. They're very quick. They have an innovation mindset. They haven't got the legacy. All of these different things, right, that come into combination. But I suppose, given the panel and what the content is really here about the end customer, if I bring it back to that and think it through fintech lens, there's something which is very different to most of the banks in a room, and that is the kind of a single-mindedness of just resolving a client problem, a client need, a customer need. Be that something that the customer knows they need, or actually an anticipated need. Sometimes we see, this is what we call disruption, right, in a marketplace, when someone comes from left field, offers someone that no one even knew they needed or wanted, and just suddenly becomes the thing, the way that we then consume financial services. So fintechs have got this thing. They are very good at, knowing who their customer is, that end consumer, and then keeping super crystal clear and focused on that customer. If I look at us as banks, of course, I mean, I don't know if anybody's ever tallied up the number of years in history that's in this room, but I'm pretty sure it's a spectacular number. We should do that, actually. There's probably a spectacular number. So many of us, hundreds of years history in our organizations. And whilst we use our marketing and PR machines to come up with really good sentences for purpose, right? I'm sure we all have that. You know, there's something that comes out of the machine and says, this is the purpose of our bank. At the end of the day, it's something pretty basic and wishy-washy and not really tangible. As opposed to some of the biggest fintechs you go out there, they are very single-minded. They only have a few years behind them. They've gone out to resolve one problem to a one client base that they can define very well. Take one sentence. I won't tell you the fintech, but you might recognize them. Their purpose is to make payments for their end customer, not for them, for their end customer, cheaper, faster, and more transparent. That's it. That's the whole purpose. Now, whilst we might have those kind of purposes within some business units, if your whole organization is focused on that one specific aim, then of course it makes the whole thing a little bit more focused, a little bit more customer-centric. So I think that's really where the success of the fintechs and where we kind of see them coming from left field. They figure out where the problem is, they figure out who their customer is very quickly, and the end customer, and then they go and resolve that. Now, there's a lot of stuff that we can talk about later on that comes with that, which is not always great. There's a lot of challenge that comes with that model too, but from a customer centricity point of view, it's pretty good formula.
Thank you, Jenni.
Well, our purpose is to bring the age of opportunity to everyone. So it's a quite wide purpose, right? And yeah, no, I would like to add that we need to first say that customers, it's a very broad definition, right? So we need to distinguish as well which customers are we talking about, and this is a broad scope. So I would like to distinguish wholesale clients or corporate clients, bigger one, SMEs versus retail clients. So just I think we should have this in mind along the panel. And yeah, I agree with what you said. So maybe these wholesale clients, for example, are looking not only for that, but they need other elements that fintechs cannot bring, which is security and trust. The trust they have behind all these long years that banking have been outstanding there, right? Or commercial bank have been outstanding there. So they need this trust. And they put it, I think, on the top of other elements that fintechs are providing. And as well, the human element, there are more human capital behind banks than maybe a fintech. So when it comes to solving a problem, and when it comes to a problem with a payment, it's good for wholesale clients to have somebody to call in the bank and say, where is my payment? And this is still relevant for those clients.
Yeah, I totally agree with everything you're both saying. You know, fintechs are very good at doing just one thing well, but they only don't do the do well. It's the support aspect you were just talking about. They're very good at being there for their end customer in times of need, not just for making a payment, for example. And I also think what they've also nailed on the head is that diverse workforce. You know, a lot of our experienced colleagues have gone to these kind of firms, but they're also hiring a lot of the new generation. So they've got their end users in their workforce, and that's how you end up designing for your end user, by having them in your team. And on top of that, I just think they're very good at marketing. It could be as simple as a bright orange debit card.
Ari, and I think that you know, the point that Raquel was making, when you look at the fintech success, probably when you think of the payments landscape, probably retail customers are much more into that than corporate customers. So with that, and Raquel, since you are more in the correspondent banking business, when we think about what is going on over the last few years, we see regulators coming in and forcing banks to really change the way they operate. They force us to change the way we charge customers or not charge customers. So how do you think that the way in which we operate is affecting the customer experience, and somehow how is that putting us against you know, this competition, the fintechs?
Yeah, it's true. I mean, we had some important milestones on the way, right? SEPA impacted the correspondent banking activity a lot, because the way we process cross-border payments in Europe, had to change, and fees had to change. We also had the euro come in, and all the European currencies disappeared, so that also had an impact. And I think this is happening not only in the bank space, but this is a result of, you know, the last 30 years where technology and innovation have crashed into our lives. Internet came into our lives. We grew up, I think, without mobile phones. The majority of people around here now, we cannot live without them. So I think that banks, we have been embracing technology. We have been changing a lot. We have been putting in place apps. We have established our focus in digitization and bringing digital clients and providing products via digital channels. Yes, I'm talking about these things. Fourth, we're living on the fourth industrial revolution now, fifth industrial revolution with Gen AI. I said it right? Gen AI. And I think with that element, I think we're banks also embracing that, and that is going to help us to improve the way that we act as well, the way that we act between banks and the way that we charge each other. I think all these new technologies are bringing new elements for us to improve, for example, having cost efficiency on the back ends. That for banks is a very important part of our costs versus, for example, fintechs, which structures are more light, right? And having less cost allows them to provide better pricing or more clear pricing. So with that element of new technologies that we shall keep on embracing, that would allow us to improve the way that we interact to each other. And not only because of technology, of course, regulation is pushing. Still, we have the G20 roadmap. That's not anything imposed, but there are certain KPIs or certain milestones that needs to be tackled. Faster payments, cheaper payments, more accessible, transparent, and we need to embrace those milestones to keep on being relevant for our clients. So, and yeah, we are on the top of embracing this technology and not being left behind out with versus the fintechs. A hybrid model that would be great as well to collaborate with the fintechs. So, how we shall do it, how we will charge each other, we need to be creative here. Yes.
And I think it shows that payments, as we all know, are bread and butter, and more than ever so, they're going to continue to be so. So I think that we'll reach a point where payments will be free for everyone. So then to make money and to bring clients to the door, it is the value add. It's what else can I provide for my client that I can charge for if payments are going to be and have to be free. I think that's incredibly important. We have to think about the day when you can't charge for payments. So what is the what else? Yeah.
Definitely. We talked about this, didn't we, beforehand as well? We talked about this kind of race to zero. So if I attend as many fintech forums as I do bank forums, and in fintech forums, they pretty much, that's what they talk about. So they don't talk about getting payments cheaper. They basically, this is the race to zero. When is payment going to be free? So payment is not something that you then charge for. Now, we kind of sit here in a club. Somebody I was talking to the other day, well, not some names, we kind of said, like, is this a nice club? And it is, right? Bank to bank, when we talk to each other, it's still a very nice club. And it's just that we're kind of playing with these classical instruments, and we're kind of thinking, well, how do we make this a little bit better? And then these rock stars show up next door, and we think, well, that's okay. We can do an electric guitar too, and we plug it in. But they have air guitars, like they have no guitars, and everybody seems to be having really good time. And we kind of keep going into that moment of, well, yes, we'll just improve a little bit of what we're doing. Whilst on the other side, they say, yeah, but we're going to do it entirely differently. So coming back to your point of how we're then going to do that. So the kind of purpose, and actually the club is there for a very good reason. When a banker talks to a banker, you understand, right? You understand all the pressures. You understand why they have to be there for regulations, for corporate governance, for all of those things which maybe fintechs are not so good at, that trust element, right? Mm-hmm. You protect your banks. So you understand. So the club is there for a very good reason. But the question is, do you open the door and actually invite few people in and say, actually, let's start looking at this together? So for me, talking about fintech and banks as in us and them feels a little sort of 2018, right? So I'm kind of moved on from that. And I think if, the rhetoric has to be about the ecosystem and what parts do we play. And there needs to be some acceptance that some of those parts might change, right? Our part in the ecosystem might change. Now, that's not necessarily a bad thing. Change hurts, for sure, but it's not necessarily a bad thing. And it's thinking about it as a much more collaborative space. I think that's the only way, because, quite frankly, there are these people outside playing the air guitars and telling us that payments will be costless. There is no cost for the payment. So if we don't get onto that bandwagon, I don't think they're going to stop for us. They're going to carry on doing it.
We have to learn from them.
Exactly.
We have to work with them.
And work with, yes, exactly. And the only other thing I would just say on the regulation point, we've seen a lot of fintechs coming onto this stage, right? And actually what they have done and some of the innovation have done, and I'm sure we are in our back rooms sometimes criticizing, the regulation isn't the same for us as it is for them, right? However, they are also being a big driving force changing the regulation, right? And getting the regulators to act and look at certain new things. So had it not been for the pressure that's coming from the other side, I think things would have been a lot less advanced than they are now. So some of the technology is really being pushed, regulation being pushed from that side.
Yeah, I mean, it's true. We have to aim for an even play field, right? But we cannot be crying or like, they have different regulations. Yeah, we need to collaborate with them. we have to push for that in different lobbies so they are regulated the same way, because same activity, same risk should be regulated same way. But at the same time, yes, I think we're following the right steps. I think we're, being able to use APIs to connect different fintechs along our engine. So I think that's good news. And how we can do this, so yeah, I agree. Payments might be free in the future, but we need to think of additional services that we can bring along with the payment. So it's like when you buy a plane ticket, right? So, low cost, very cheap. Okay, take your luggage now. Boom, you pay more. So in a payment, yeah, maybe it's free, but maybe knowing exactly when the payment is going to be delivered and arrived in advance, we can charge for that. So let's find where.
So with that and looking at the future, Connie, you're in the real-time payments, but there are many market, industry initiatives coming up in the future. So how all these initiatives are going to help onto this kind of fight that we have to serve our customers?
Sure, and no surprise, going to stick in the instant payment world and still tied to legislation. So as a lot of you, I'm sure, are aware, are very aware of the big change coming our way as under the EU instant payments legislation, which is going to mandate instant reachability for all those who offer SEPA-CT. And I think this is a great example where even though it's a huge amount of pressure and to deliver on the vast amount of change that this legislation is bringing in, you've got to think about ways to commercialise on it. Think about what opportunities it could provide for your firm, but also your clients, and not just think about it as an end goal to tick a box. I think this is a huge opportunity to jump on and be part of a huge market change that is going to obviously change the European landscape. Coming from the UK, we've had instant payments for over 15 years, and I definitely assumed that was the norm until I developed my understanding, got involved in the instant payments world, and I am excited to be part of the change in the European landscape and see if we can drive change, that change, and see if the instant payments landscape does start taking over the world or Europe as such. And it's all about thinking about that end client and what are they needing it for. And another legislation that's happening, or regulatory change anyway, is in the Switzerland market. They've also introduced a brand new instant payment scheme, and they're mandating certain banks to join. So again, feels like another regulatory application and a tick box to do, but it's, again, thinking about the opportunity. And I'm always reminded about a Swiss colleague of mine was pinging me for an update on the project. And they were just telling me how excited they are to have instant payments and how they're really looking forward to have this other payment channel in their home country. And that just really hit home that I'm not just doing it for my corporate base or doing it to tick a box. There is that end user out there that needs this change and is looking for that exciting new opportunity. And obviously this all ties back to being able to grow as banks. If you're not just doing the tick box, but thinking about the opportunity, that's how you can start thinking about how to grow your business. And on top of that, I'd also just want to say that obviously I'm very sensitive to that the amount of change is a lot of pressure, and not every organisation can easily get the budget and the resources to support it. And obviously regulation aside, there's also huge amounts of other innovation and initiatives going on. And think like a fintech. As you said, they don't do everything. They do one thing well, or a couple of things well. If you can't do everything, do a couple of, do one or two things very well. But think future. Think about scalable technology. Think about cloud. Our RTP platform that we have was built on cloud native. It's built ISO 20022 native. For markets that aren't even on that ISO yet, but we know we're ready for when that market does that change. And also think about cross-border. You may be thinking in a domestic mindset, especially when it comes to sanctions, but think about the day that you might have to support cross-border, and think about your sanctions model. So even if you can't do all the changes right now and be involved in everything, you're prepared for growth and have a future-ready platform or payment product in your arms.
Okay. Any other views?
No, I'm fascinated by the number one question on the slide over here.
Right.
So I think we'll probably need to tackle that. I think it comes back to some of the points there as well. So this is about financial delays. So it comes back to us talking about all of the other things that perhaps some of these fintechs don't do so well.
Right. I see here one question that I think is the first one. Isn't part of the success of fintechs that banks do much of the dirty work for them? If they had to build entire payment infrastructure from scratch, they wouldn't look so slick, would they?
So number two, yeah, I was looking at the very top one there, Carlos, actually, the
the
largest fintechs associated with financial statement delays, negative news, high staff management turnover, uncertainty, and so on and so on. I think, because this is one that comes up all the time, right? So this is what we do as banks. On one hand, we see them having success, and then our response is, yeah, but people don't trust you because you have all these other issues going in your organization. The reality is that perhaps some of the people in fintechs and companies even refer to this sentence, are the biggest consumer banks now in several European countries, right? So we might talk about it, we might have that conversation in our governance forums, and we might sit here, might moan about it, but the reality is that the end customer, particularly in the retail market, the consumer is willing to buy. Perhaps the consumer doesn't really care that their financial statements were late. They probably don't care. Why would I? I don't, right? If I want to pay, some money to a friend, to a family, whatever, I don't go in to the company's house and Google and say, well, how financially stable is this company? No, I whip up the app on my phone and do it where it is the fastest, quickest thing to do. I do not need a Swift GPI tracker, because my payment was instant. It made it. The illusion of it was instant. Now, we know technically, actually, there was nothing that happened instantly at all. But it is the illusion. It is the customer experience. So bringing it back again, the point, this is what we do as banks, right? We retort. But our retort is always from what is our wheelhouse, our strong engine, and it's super important. However, at the same time, the end customer is out there. It's buying from these services. So that's where I'm kind of going back to and thinking we need to be a little bit more clever about it. Financial statements being late is not going to stop these fintech banks being the biggest consumer banks, right? It's not going to stop it. However, learning from them and getting more into the single mindset, actually understanding, actually starting to work with them, but also with our own things and getting that customer proposition right at the center of it, I think is going to be much more productive as a conversation.
And it's remembering that those end users, while we're thinking in a retail mindset, are the same people making the decisions on what banks they're selecting as a bank or a corporate.
Yeah.
So yes, they're a retail customer, but they're thinking in that mindset when they're making their business decisions, and it's important to remember that.
Yeah, absolutely.
Yeah, and the question I'm linking with another question, the one that I was reading before on this dirty word that they refer to. Truth is that at the end of the day, the railways that they use are banks' railways. So how do we change our operations? Is there anything we can do to really to really make sure that we put value, or we put the value that we provide onto the real customer, onto the end customer?
Yeah, well, I think, for example, we have Swift GPI. There still we can do more. If we see the value chain of the payment, at the end of the day, we have the first part, which is how fast the payment comes out actually from your bank to the next bank in the chain, right? And the final step, which is when the final beneficiary bank credits the final beneficiary. And yes, coming to your question is, fintechs still need the banks, because this end part, there is a bank. It's not fintech. It cannot be done on a fintech basis, right? So that delay, I mean, even if they say the payment has been executed, there is this last part that they suffer the same problems as we do, in terms of maybe at the last end of the value chain of the payment, there are some capital controls at the final country destination, or there is some AML controls that the final bank takes longer time to make. So, this is where we merge with the fintechs, and this is where we can keep on pushing how we improve how fast the payment is on those two like first part of the value chain of the payment and last part of the value chain of the payment. I think we haven't done much. It is true, we say 80% of the payments are processed within an hour. I think that's after the payment has gone out of the bank, first initial bank, ordering bank, and to the final beneficiary bank. But that's not true for the whole payment. The payment takes
depends on the
longer,
currencies
and
also.
we are not clear. I think commercial banks were still not clear on the whole part, and we can add value to our clients and keep on working on that, and improving that.
Move to instant. 10 seconds.
Yes, but then, instant. But then at the end, if the final beneficiary bank is in a geography that has specific regulations, even if you say it might have reached the final beneficiary bank, but not the final client.
It definitely varies by market.
So
I see there is a question that is more for the moderator than for the panelists. So yes, and on Santander, it's true. We created a fintech, and the question is a very relevant question. How do we ensure that it doesn't eat on our lunch? Well, the way in which we created the fintech is very easy. We thought that to be responsive to the current environment, we needed to go for our own fintech, so that we can have what Jenni was referring to, which is this speed, this different way of approaching the customer needs, and be more flexible and much faster. The way we did it is we segregated it into a different entity, which is behaving and working as a fintech, even though it's 100% owned by Santander, which is PagoNext. And the way we ensure that it's not eating our lunch is basically the other way around. We are putting all our payments, we are moving all our payments into this fintech. So at the end of the day, we somehow are in a process to make sure that our payments infrastructure is developed through this PagoNext infrastructure, making it more agile, faster, and more efficient. While the banks are going to be in the future using, and when I say the banks, all the units that we have, maybe it could be Santander Spain, could be Santander Brazil, could be Santander Mexico, should be using this infrastructure, this fintech, for the purpose of having a much more efficient payments hub, if you want, a payments platform for their customers. So that's the way in which we have created it, and we are developing that as we speak. Okay, other questions? Who wants to take the race to zero for cross-border payments?
No one wants to take that, right?
which one?
Sorry.
That does make me laugh, because I think it gets me thinking that that's a very today mindset. It's not a future mindset, and so it's almost thinking about the race to zero will happen, even if there is FX, and so you've got to find a way to make it make sense, and that's the way the world is going. Again, I'm going to keep tying it back to my world of instant payments, but we know we're not only talking about cross-border payments, making it easier and more transparent across the globe for all payment types. There's a lot of conversations on making cross-border instant payments easier, and there's been various examples across the world with Singapore. There's been pilots with the OCT instant payment scheme, with IXB, and so if that happens, zero priced or cheaper cross-border payments with an FX will happen, and we've got to prepare for that and start thinking about that as the future and not something that we can ignore, or the fintechs will get on top of it.
I so 100% agree with you there. It's that inevitable about it. It is going to happen. When it happens, it's a different matter, and if we knew, then we'd probably be sitting in a different room right now making those predictions. But I think we do have to prepare for it. It is about the value. So when we say the payment is going to zero, it doesn't necessarily mean that the cost for the end customer is zero, right? So the end customer will still probably be willing to put some money into it. It's just that the payment element of itself, so the penny per payment cost, doesn't exist anymore. So there are other things. And I was talking to someone, we did a little poll internally not long ago, and we kind of had this conversation around what would you choose? If I need to send money cross-border, and if someone's telling me, okay, you know what, this, let's take 100 euros, you know what, you're going to have to give me €1, but I'm going to guarantee you that your 100 euros is exactly 100 euros when it arrives, and it's going to arrive on this minute or this hour, right, of this day, and your beneficiary is going to get it straight away, but you're going to give me 101 and they're going to get exactly 100. I probably choose that over a proposition which says, you give me 100 euros, I'm not quite sure what's going to get to the other side and when it's going to get. It depends on my correspondent banking network and what deductions they make in a between, right? That isn't the proposition, right? You don't go and sell that. So therefore, I think there is still value. It's just the payment itself we need to kind of start thinking about. Where is that value chain? Where is the money going to be made? And what other things do you put onto it? What other services do you then provide to your customer that is of value to them, that they're willing to pay for?
I was going to make the question that we are talking about race to zero, we're talking about pricing, but is that the key element right now, or are other elements like predictability, like simplicity? Because one of the things that maybe is, at this point in time, is too complex for a customer to understand when he deals with banks is all this structure of deduction of fees from the payment, and I send 100 and then suddenly somebody's deducting something in the other place, charge them versus charge hour, all that structure seems to be complex. So my question would be precisely that, whether we are focusing a lot on race to zero when maybe there are other things like predictability or simplicity that are more important for them, especially on the retail space. Okay, other questions here. I think we have probably time for another one.
So I like this one about the rails. So it's like a fourth one down. It talks about, can banks keep saying fintech experience in many instances they're using bank rails to settle?
Fintech experience for the clients.
Yeah.
Yep. You want to take that?
They are 100% using the bank rails to settle, right? Of course they are, and this is the whole point of it. It is not that there is this different ecosystem somewhere. It all plugs in. So banks are relevant, and this goes to the point of, it's just that our position in that whole ecosystem, our value in the whole ecosystem, the way that we make value for ourselves and our customers, those customer journeys that we need to understand are probably going to be different and are different to what they were, and they continue to evolve. So of course, it's one big ecosystem. Fintechs don't exist in some sort of a weird pseudo-economy somewhere. They are part of us. They are part of your own firm, as you just discussed. So they are everywhere, and they are fully integrated. And despite of the kind of a public rhetoric out there, actually super willing to work with banks and do work with banks. And no fintech exists without a bank network. They don't. They have our equivalent sitting there looking at these bank networks. And one of my big points that we haven't really discussed, is not topic of this forum so much, but worth still bringing up. We do have a responsibility, however, to ensure that when we do go out there and look at these opportunities, we engage with the fintech community and together bring up the standards. So I do think that given they're not going to go away, we can't wish them away. Therefore, it is also kind of upon us to ensure that we kind of compel them to increase some of these other questions coming in, the AML standards, making sure that their corporate governance is at the right level. That's kind of an industry-wide thing that banks need to do. By involving, you increase the standards, and I think by the end of it, everybody is better off.
Okay. Any other comments? Raquel, Connie?
No, I think we are on the right track. I think all banks are looking at this very carefully, are looking at how to improve the way that we process payments, and on the top of it, we are investing a lot in infrastructure to be able to analyze the data that we have, and we have much more data than fintechs, for example. Sorry, to be honest, I'm always putting fintechs, banks. I think we should collaborate and have sort of a hybrid model. But I think what we're well, what we are getting ready for is to utilize all this data that we have. We are investing in the cloud, and this would allow us, even and despite all our legacy systems, these new technologies that I was speaking about at the beginning, these new technologies allow us to have the different legacy systems, to combine them on an easier way than like maybe 10 years ago. So with that in mind, that shall bring us more information about our clients, and we shall be able to provide additional services tailor-made for the customer and bring them a very good customer experience. So we would maybe get other input or other income out of these other services that we're going to be able to provide. You go to an app, your app now of the bank, and they come up with a loan for specific things, and you're like, oh, they're offering me whatever. It's like when you go into Netflix and they suggest you movies according to whatever you did before. So I think we're going on that direction, definitely.
Connie, any final comments?
Just that I think going back to the original topic, we as banks are putting our clients first, and I think it's something we're very good at. Fintechs are doing it as well, and also very good at it. We've got to learn from each other. We've got to collaborate. It's the only way to drive change. You know, we all want the same, whether it's regulatory change, innovative change. We've got to work together.
Excellent. Well, I think we already ran over time, a couple of minutes. So, well, thank you very much. I think it's been a really interesting discussion. Hope that the audience found it also interesting. And also thank you to the audience for listening and for the questions. And now I think it's time for the next panel. I leave it to the stage to Jean-François.
Thank you.